Hello traders and welcome to another video review. Today is Monday the 13th of September 2021. Let's take a look at the Forex calendar today. As we can see, there isn't almost anything interesting in the Monday's calendar. We got only wholesale price index data from Germany scheduled for release 8 o'clock. Then a quarterly unemployment rate from Italy scheduled for release 10 o'clock. As you can see, the second quarter is 10% unemployment, so that's a kind of a high. And federal budget balance data scheduled for release 8 p.m. from the US. So I think we should do the major analysis, shall we? Let's start with the cable. British pound to American dollar made very interesting candle on a daily time frame chart. Let's just zoom in. This candle, as you can see here, has hit the level of 1.3892 almost. The high was 4 pips lower, but the bearish pressure had put the prices, has pushed the prices way below the below this level, and the market closed with this kind of a little bit below this open line, which is why this candle is red, and we have a very long upper shadow. That means around the level of 1.3850 to 1.3890 there is a bearish pressure active on this market. As you can see, our scenario for another bounce to the upside is not materializing just yet, because we assume that we need only a bounce from this support here. But it starts to look right now as a false breakout above this trend line. So this scenario towards the level of 1.4 is valid only if a new high above 1.3892 is made. Okay, otherwise we might keep consolidating or bouncing up and down in a whipsaw mode between the levels of 1.3731 1.3892. So that's the outlook for the British pound. Let's take a look at euro. The euro dollar is going lower. We have hit the 1.1816 level, which is 38% of the Fibonacci retracement. We bounced, but just slightly above it. So right now we can remove it from our chart. And as we can see, the price broken below the 1.1806 technical support and the trend line support as well. Of course, we are out of this acceleration channel, so right now we are removing our channel out of the out of this chart. We are removing our Fibonacci projection levels out of the chart because there is no continuation to the upside. We have this pin bar here, which occurred in the previous area of the pin bars. So we have a high at 1.1909. We are out of the channel, below the trend line, below the technical support. We are heading towards 50% of the Fibonacci retracement seen at the level of 1.1787. Of course, there is still 61% of the Fibonacci retracement, 1.7058, and this is the last hope for the bulls. The momentum is below the level of 50 on the RSI indicator, which means the bears are in control of the market, and we might see sooner or later those two levels to be hit on the euro dollar. What is gold doing? Well, the gold didn't actually follow our scenario as well, because of course we hit the level of 1833. So the key technical resistance has been hit, the key target has been hit, but there was no follow through. So right now we are removing our scenario to the upside. We are changing our levels from the technical supports now to the technical resistance, and those levels are 1808 and 1000 1,801. This is very interesting technical resistance level for now. Market is consolidating below this level and just slightly bouncing off the long-term blue trend line support. But if we break back below the level of 1,780, the next target is 1,760 or 1,750. Those two technical support levels that worked previously. Of course, the ultimate target is again 61%, but this one had been tested already, so we're just keeping it for the purpose of the price projection. But the down move on the gold might be as deep as the 61%, or even the green zone here. As you can see, the green demand zone located between the levels of 1,677 and 1,658, but that's in the near future. What is S&P 500 index doing? S&P 500 finally starting to look a little bit down. The recent high may at the level of 4,550 was the last one, and the last correction was 2.86%. Well, I've been thinking about correction or pullback. Let me see how much we done already. We have 2% pullback or correction made already, but this doesn't look good. This is daily time frame chart, and finally the momentum is below the level of 50. It's 45 points. However, we've seen that before on S&P 500, so I will just I think maybe okay, we will not touch it yet. We will just keep it on the current state. All of the lines are of course valid as well. Let me just change the color to the red. There you go. The technical resistance is here. It looks like a typical pullback during the way up. We've seen that many times before, and as long as we trade above 4,300 and as long as we are not back inside this gray channel, for those of you who don't remember, let me just put it here. There you go. This is our gray channel. As long as we are not trading back inside the gray channel, it's just a typical pullback on the way up on the S&P 500 index. So S&P 500, and one more thing I would like to point out is oil. What is oil doing? We are trading on oil around the level of $70 per barrel, which means that we are testing the upper channel line or upper trend line here. The recent price action from $67.97 had been very promising. However, we didn't actually break below the short-term resistance at 70.61. Yes, $70.60. So this is still our target in the near term. It looks like the breakout above this upper channel line is valid, is solid, and we should see further market move continuation towards 74.37 as the extension of this move from 62.34. Okay, so please keep an eye on 67.97 technical support, 67.06 technical support, and of course if those supports hold, then we can assume that the price of crude oil will go higher towards 74.37, 75.16. Okay, so that's the picture of the crude oil. Very straightforward, nothing big to deal with here. Let's take a look at cryptocurrency. The last analysis of today is Bitcoin. After this 18.5% decline, Bitcoin tried to rally above 50,000, but it didn't happen, and the higher price was around 47,390. So this level around 47,000 is keep holding the bears, right? It's capping any rally to the upside, and it doesn't look good anymore because we've been consolidating for the whole previous week, and it looks like the market wants to go lower. And the next targets are $43,053 and $41,188. So please pay attention to those two levels, because this is the key demand zone, those two technical support zones, because it's been working previously as a demand zone, and it was broken, and right now, and then it was working as a supply zone. After the breakout, there might be some sort of the demand in this zone from the bulls, and they might push it higher if they are strong enough. However, the momentum on the RSI is already below the level of 50, below the neutral level. So if we break below 41,188, the momentum might accelerate, the market might accelerate toward 36,520. So the key zone for now between 41,188, $43,053. So please keep an eye on this zone for a potential bounce or a breakout. So that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and